Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. In today's video, we're going to talk a little bit about real estate. I've been getting a lot of comments, a lot of Instagram DMs about real estate investing, and I thought, why not take some time out today and make a video on what should you be doing to position yourself to be able to buy real estate. Now, I know we've been hearing a lot of things on YouTube and the mainstream media about what's going on with our real estate market. You hear figures like 3 million people are past due on their mortgage payments. And is that going to trigger a real estate downturn? You hear numbers like 20-30% decline in real estate values. And a lot of the questions I get is, should I wait? Should I wait for the market to crash and pick up real estate at cheap prices? Well guys, I've been invested in real estate for over 25 years. And the last major recession we had was in 2008. Now, prior to 2008, I had invested in real estate and did well. During the 2008 downturn or recession, I also bought real estate and did well. My point is, you can buy real estate in both good and bad economies. You just have to have some fundamental things in place in order to make that happen. Now, I know some of you guys are veteran real estate investors. You've already built really nice real estate portfolios, and congratulations to you. But there are a lot of people out there who want to get into real estate that are brand spanking new, and they have really no idea where to start. So I want to really focus the video around those people. The first thing I would do if I was brand new and I was thinking about becoming a real estate investor, I would look at my personal finances. I would look at what kind of condition am I in financially. Unless you have a lot of money where you can go and pay cash for a real estate property, then you better be bankable, because you're going to need to go to some lender and borrow money. If you guys have watched any of my videos, I'm a big fan of leverage, using leverage the correct way. And leverage simply means you take a small amount of something and you turn it into a big amount of something. So I can take a 3.5%, I can take a 5%, I can take 10% of my money, and I can invest it in a piece of real estate and go borrow the remainder of the money from a bank. That's leverage. So in order to take advantage of leverage though, and have the very best interest rates and the very best loan terms, you're gonna have to be bankable. And all bankable means is you need to have consistent, proven, verifiable income, and you need to have decent credit score. And when I say decent credit score, I'm talking about a credit score of 680 or higher. Now, you can't have any major problems inside of your credit report. You can't have a bunch of charge-offs. You can't have a bunch of collection accounts. You can't have tax liens or child support liens. You got to have a pretty clean credit report and be at least a 680 or higher. Now, can you get a mortgage with a credit score under 680? Yes, you can. You can do that. There are programs out there like FHA, First Time Buyers Program, that they will allow you to have a credit score of 580 and higher. But that's just for your first property. Once you get past that first property, then you're going to become a real estate investor with that second property or that third property, and your credit score, if you want to get really good interest rates and good long-term financing, you're going to have a 680 credit score or higher, in my opinion. Back to your income. Your income is important, because when you're just starting out in real estate, you're not considered a real estate investor. You're just considered an individual who wants to buy a piece of real estate. So that's how the banks are going to treat you. They're going to look at your personal income to determine if you can afford this new property. They're not going to really take in consideration the rental income at this point, because why? You're brand new. You're not a proven real estate investor. So they're going to look at your individual income to determine if you have the financial wherewithal to be able to support and pay for this mortgage, along with your existing debt requirements. And they use a term called debt to income ratio. So for every dollar in income you have coming in, most lenders only want to see about 40 cents of that dollar going out to pay for debt, including the new mortgage. So a 40% debt to income ratio. Now with FHA, that debt to income ratio, I believe, is about 50%. Again, they're trying to encourage first-time home buyers the ability to be able to buy real estate. That program really is not for investors, but I used that program in order to buy my first single-family home, and then that first single-family home was my springboard to buy more real estate and become a real estate investor, because I used that home and I used the equity in that home. Back to that leverage term I talked about, I leveraged the equity in that first home in order to buy my second one, and then I put a tenant in the first one, and that's how I started my real estate business. So leverage is extremely important. Being bankable is extremely important, right? And then the third thing I want you guys to think about is location. You have to buy real estate in the right location. I get a lot of comments and questions from people who live in areas of the country where real estate is very expensive. You know, New York, Seattle, Washington, Washington, D.C., California, places where real estate is super expensive. What I will tell you there is there's still opportunity in those places to buy real estate. You just have to know where to look, right? Now, in the event you decide, you know, real estate prices are just too high in the area I live in, then you have a decision to make. You can buy real estate in neighboring states that are adjacent to your state and be an absentee landlord, or you can simply decide to move. You know, you can uproot yourself from the state you're living in and go move to a state who has more favorable real estate prices. States like Florida, Texas, Arizona, those three states have favorable real estate prices that people can actually buy real estate and be able to make money off of it. Once you get the right location, then you have to look for value. You got to look for below market real estate in that great location. Let me give you an example. Let's say you want to buy a single family home and your budget is $300,000. So I would find a $300,000 neighborhood that I would live in myself. Now, everybody doesn't believe in that, but I think when I find neighborhoods that I would live in, it gives me a better opportunity to find tenants who are, you know, have a financial situation similar to mine, and I won't have as much problems with that tenant getting my rent. So I'm gonna find a $300,000 location. I'm gonna look for properties in that $300,000 location that are below market. So I'm gonna look for properties in that 225 to 250 range, and then those are the properties I'm gonna focus in on. Because if I can buy those properties and put about 10 grand into them to do a little bit of facelift, now all of a sudden I'm in a $300,000 neighborhood. I bought a property for 225, 250, I put 10 grand into it. Now I have instant equity, right? And that's how you want to buy real estate. You want to buy value. You want to buy location first and then find value in that location. So if you do those things, guys, I think you give yourself a really good chance to be successful in real estate. Again, don't worry about all the noise you're hearing out there, you know, about 3 million people are going to be going into guys, in order to foreclose on a property, a bank, a lender to foreclose, they have to sue the people. They have to go through the court system to do that. That could take 24 to 36 months in a lot of cases. But I don't believe that's going to happen. I think a lot of these people decided, you know, the CARES Act gave us the opportunity to not pay our mortgage for 3, 6, 12 months. I'm going to take advantage of that since it's something that I can do. It doesn't mean I can't pay the mortgage. It just means I'll take that cash and save it or invest it until I'm required to have to pay my mortgage again. A lot of people took advantage of that. Now, there are some people out there that lost their jobs because of the pandemic, and those people are in a situation where they may face foreclosure. But again, it's going to take 24 to 36 months, and I don't want you guys waiting for that to happen before you buy real estate. Remember, you can buy real estate in good and bad times if you buy it properly. If you have the basic fundamental things you're going to need in order to buy real estate successfully. And I mentioned those already, and I'll mention them one more time. That's going to be leverage, being bankable, and buying real estate in the right location. Well, guys, drop me some comments. Let me know what you think about the video. If you're stopping by the channel for the first time, please consider subscribing to the channel, share the video, and smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.